Thus, the triangle pattern emerges as the price follows a specific trajectory, causing trend lines and resistance lines to converge and intersect. I'll sketch a typical price movement. Next, we draw a resistance line above the highs. This line slopes downward and intersects the support level. Conversely, an ascending triangle appears the same, only in reverse. In this pattern, highs remain at the same level, while lows, on the contrary, progressively rise. Hey guys, I'm delighted to see you, and I'm confident you're equally pleased to witness a fresh installment on this channel. If any of you are encountering me for the first time, I highly recommend subscribing to my YouTube channel. I'm Mary, and I have the potential to become your personal trader. I also have a Telegram channel where we collaborate, I share signals, and together we generate earnings. I work both with myself and for you. The link to my Telegram channel can be found in the description to this video. Today we will delve into a simple, intriguing, and highly effective pattern that proved invaluable to me during my early days of learning trading. This pattern is known as a triangle. It frequently manifests across various charts and consistently yields favorable results. Mastering this pattern enables you to execute more profitable trades and eventually work towards financial independence. Prices are in perpetual motions, offering opportunities to those capable of predicting their trajectories. As such, recognizing these frequently occurring patterns grants you an edge over traders who navigate head and shoulders or other intricate patterns. I seem to have veered, of course, so let's transition to the chart. Thus, the triangle pattern emerges as the price follows a specific trajectory, causing trend lines and resistance lines to converge and intersect. I'll sketch a typical price movement. Highs are declining while lows remain at the same level. Such occurrences are common across charts and time frames. Now, observe that we can draw a horizontal line beneath the lows. This is a support level that the price rebounds from. Next, we draw a resistance line above the highs. This line slopes downward and intersects the support level. This is how we form a descending triangle. It's termed descending because the upper boundary gradually lowers. Certainly, it's evident that this is a triangle. In essence, when the support level is horizontal or nearly so, and the resistance level unmistakably slopes downward over time, it's a descending triangle. Conversely, an ascending triangle appears the same, only in reverse. In this pattern, highs remain at the same level, while lows, on the contrary, progressively rise. Consequently, the resistance line appears horizontal or almost so, while the support line consistently ascends and encounters resistance. This depicts the typical ascending triangle. For clarity, I'll draw lines to enhance comprehension. The support line ascends while the resistance line remains level. Eventually, the price tightens, akin to a spring, and then something intriguing transpires. It's crucial to remember that triangles come in ascending and descending varieties, distinguishable by their horizontal and angled lines. I won't elaborate much on where the price moves after a triangle's formation and how to trade it just yet, as I need to share critical detail, the preconditions leading to the formation of any reliable triangle. Triangles most frequently materialize after some form of impulsive movement. For instance, if there's been a significant downward impulse movement, it's common for a triangle to form during a brief lull. Whether it takes the shape of a descending or ascending triangle depends on whether there is an upward or a downward bias. They can be traded to the downside. To achieve this, the price must breach the lower boundary of the triangle downward. For example, this juncture would be opportune for a short entry, and similarly here, if the price breaches the lower boundary of the triangle following a substantial decline. In essence, the price declines when the triangle takes shape, and once the lower boundary is breached, we enter for a decline. With an upward movement, the reverse holds true. We enter for an upward movement. Let's say there was an upward impulsive movement followed by the formation of a triangle. If the price breaks above the upper boundary of the triangle, we can consider entering for an upward movement. For example, in this zone, or perhaps this zone. Typically, after such triangle breakouts, the price continues to rise. consequently generating profit for traders. In essence, if the price is ascending, forms a triangle, and breaches the triangle's upper boundary, then it's advisable to enter for an upward movement. Now, another critical point: when not to trade a triangle. Suppose we've had an upward impulse, followed by the formation of a triangle, but the price breaks below it. Should you enter for a decline? No. That would be an ill-advised decision. Not because I'm saying so, but due to statistics revealing that such trades yield profits in only 20 to 30% of cases. In such scenario, you're going against the overall trend and incurring substantial risk. If the trend is upward, seek opportunities for trades in the same direction rather than going against the market. You might get lucky once or twice, but more often than not, you'll lose money rather than gain. A similar solution holds true for a triangle following a downward impulse. If the price breaks above it, it's not recommended to enter for an upward movement. It's risky. The probability of gaining profit is exceedingly low, as you'd be trading against the prevailing trend. And that covers all the secrets of the triangle pattern. With theory concluded, let's transition to practical application. So I've identified the first triangle. It is formed on the chart of the USD to Chinese yuan currency pair. I've already opened a trade for 5% of my deposit in the downward direction with an expiration time of 3 minutes. While it's in progress, let me quickly illustrate where the triangle is located. For this, let's switch to trading view, as I've already drawn all the necessary lines there. So first, an abrupt downward impulsive movement occurred on this currency pair. Subsequently, the anticipated correction followed, then another downward move with a new low, and several more oscillations back and forth. In essence, the price began consolidating and formed the triangle pattern. Our support line is horizontal, as the lows are at the same level, while the resistance line slopes downward. Together, they constitute triangle. I believe this is quite apparent, even though we only have 2 points at the bottom and the top. In principle, this is sufficient for constructing a triangle. Next, a red candle breached this triangle downwards. This adheres to the rules of trading the triangle pattern. After a downward impulse, a triangle formed and the price broke below it. Therefore, it's recommended to enter for a decline. It's possible to anticipate that the price will continue to fall, meaning a decline trade carries an 80–90% probability of being profitable. Now, let's wait for the outcome. So the trade's expiration time has elapsed and I've obtained profit. As you can see, after breaching the triangle, the price began to descend. There was a minor correction, perhaps due to a subtle level, but I secured profit. Now, the price is likely to continue falling. In the meantime, I'll shift my focus to other currency pairs in search of a new triangle. Here is another triangle on the chart of the Australian dollar to Canadian dollar currency pair. In this case, I'll be entering for an upward movement. I believe the most attentive viewers have noticed the chart and understood why I made this decision. Entering for an upward movement with 5% of my deposit and an expiration time of 3 minutes. Alright, the trade is already open. Now let's delve into the explanations of why I entered the trade right here, rather than at the support level based on a candlestick pattern or any other signal. As you can see, the chart initially featured a strong impulsive upward movement. At the end of this movement, the price began to correct. It gradually declined until it reached a robust support level. A descending triangle formed, but then the price broke above the resistance line. As we're experiencing an overall upward trend and the price has just breached resistance, I immediately entered the trade for an upward movement. As is often the case with triangles with an 80–90% probability, the price will continue to rise and I'll profit. In the meantime, let's wait the trade's completion. So the expiration time for this trade has elapsed and it's quite evident that I've gained profit. As you can see, the triangles work perfectly. The key takeaway is to trade only breakouts of levels in the direction of the overall trend, and you also can learn from this pattern. I'm truly delighted to see the new subscriptions to the channel, so please make me happy. And I'd like to remind you, if you want to trade alongside me, I await your subscriptions to my Telegram. The link is in the description. See you next time.